Alright, today is Monday, September 28th, and this is a review for the stock market activities today. Here is the agenda of the day, and we do have important discussions in the options market analysis. And of course, we will cover multiple charts today for the SPY, the Qs, the dollar index, the VIX, gold, Apple, and Tesla. And here we go, the Dow Industrial Average closing in the green by 410.10 points, or an increase of 1.51%. The Nasdaq in the green by 203.96 points, or an increase of 1.87%. The S&P 500 closing in the green, 53.14 points, or a gain of 1.61%. What about the sector's performance? Look at that. Everything is in the green today. And of course, when we saw the dollar declining, you immediately saw a rebound today in the market in energy, materials, consumer defensives, all the dollar sensitive sectors. And of course, the gold medal here goes to real estate, the silver to consumer cyclicals, and the bronze to financials. Even financials rebounding today. And the question, of course, is the rebound we saw in weaker sectors such as financials and oil, is it a dead cat bounce? Or is there more to build on the movement today? We will try to answer the question when we look at the charts, specifically for the dollar index. But for now, we're moving on to the coverage of the futures market. Soybean oil continues to gain in the grains futures, while we see oats declining today. Among the gainers, of course, it meets lean hogs. Lean hogs continues to rally as the demand increases while the supply shrinks. Good day for metals today, specifically platinum. Massive move in platinum today. And of course, among softs, we see OJ finally having a positive day. Yet lumber continues to decline, so did coffee. We're still looking for a bottom in coffee. Coffee needs to find a footing here before we open a contract. And of course, sugar not acting as sweet today. Moving on to the gamblers market, the options market. Leading the day, per usual, Apple with 1.5 million option contracts traded today. 70% of those were calls. And by the way, the notional value of the options traded today in Apple's stock is equivalent, of course, of 150 million shares. Let's take a look at how many shares traded in Apple stock today. 137 million. You see the picture. The gambling mania in the options market is what is leading the market these days. Forget what the media is saying about optimism and reopening and not reopening and all the bullshit excuses they tried to come up with to explain the movement in the market. All you have to do is take a look at the options market and you'll have all the explanations you need. The volume of the derivative is eclipsing the volume of the actual underlying stock. Again, this is the mania. Likewise, Tesla number 2, 530,000 options traded today. 63% of those were calls. And of course, the total volume of shares traded in Tesla stock is about 49 million shares. Meanwhile, the options volume indicates over 53 million shares in notional value. Again, the volume of options exceeding the volume of the actual shares, meaning that there is nobody buying Apple and Tesla at these levels. I know all the quote-unquote analysts and the experts on television, they come over and they say, oh, you should buy Apple, you should buy Tesla. Tech is okay at these levels. But these snakes are not buying Apple or Tesla or anything. They own it lower and you just want to pump it higher and higher and higher. Because I don't see any institutional rush back to technology names or Apple or any of the Tesla names, the momentum names. All the buying is done via the options market. Meaning you buy a call, somebody's going to sell you that call. They have to buy 100 shares of the underlying stock as a hedge, and that pushes the stock price higher and higher. Case in point, Boeing at number 3, 377,000 options traded today. 77.7% of those were calls. Now on Friday, we saw the options activities in Boeing and airliners, specifically American Airlines. So the question you might have, why the hell is Boeing up 67% today? The media tried to answer that question. They found out some news they can attach to the move. Of course, they're confused. They have no idea why Boeing is trading 67% in the green today. But if you are watching the options market, you know exactly what happened. Boeing, of course, is not as widely held these days, say compared to Apple and Tesla. So when we saw a surge of call buying activities in Boeing, of course that scrambled option sellers to buy shares of Boeing. And those option riders who wrote Boeing calls a while ago thinking they'll expire worthless, all of a sudden scrambled to buy shares now to hedge against the calls they sold. And therefore you see the big move in Boeing. And of course the level they're targeting here is 170 in Boeing. Now moving on to the volume leaders today, and as you can see, Apple calls for the 115 and the 120 expiring this week led the volume in the options market today. That of course tells us that there is more room for Apple stock to grow this week before any potential reversal. We're eyeing, of course, the 120 levels here. But it also tells you that the market movement is again led by gambling activities, and that is it. Buying way out of the money calls, expecting big surges in these names. The Robin Hoodiots had a good time doing this strategy back in July and August, and now they're trying to repeat it again, reverting back to what worked for them until it no longer works for them anymore. And what about the decrease in open interest rather? That tells us which option trades are being closed, and we can get hints and clues on the direction of these underlying stocks. You see the 105 puts in Apple are being closed today. That tells you that these holders of the 105 put are giving up, they're closing. They know that Apple is likely not going to visit 105 this week. It will more likely visit 120 before it visits 105. And another one that caught my eye for FCX, Freeport McMoran. You see the $10 put for January being closed, perhaps signaling a short-term bottom in this name. And of course, signaling a short-term bottom in metals, in gold, copper, and that of course comes hand in hand with the decline in the US dollar that we saw today. And now, moving on to the headlines that shaped the day, starting of course with the tension between the US and China. Earlier today, we heard about the new sanctions in the Chinese semiconductor company SMIC. Of course, the supplier of this company are US manufacturers, so hitting a Chinese company will have collateral damage in US semiconductor companies. The market shrugged the news off. You saw, of course, semiconductor stocks rallying today. Perhaps if this snowballs into something more and retaliation, watch out for the risk here in the semiconductor sector. And of course, we had some bizarre news from the mouthpiece of the CCP, who came out and said that somehow they uncovered a plan of a military attack from the US against an island in China, and he threatened that the Chinese will respond with military action. So what do you say, a war between the US and China? No big deal. The market rallied and shrugged that off as if the US and China just announced a peace deal instead. And of course, we have the good professor from Wharton, Jeremy Siegel. Jeremy Siegel is known as a perma-bull, and he always believed the stock market will go higher. And today he came out and he said basically that stocks only go up. And of course, I released this tweet reminding everybody of the history of the good professor Jeremy Siegel, when he predicted in 2008 that there will not be any recession happening anytime soon. And of course, if you are a current student of Professor Jeremy Siegel, when he hands you the final papers for the exam, you don't need to answer that. Just grab the paper, scratch everything out, and write "stonks only go up" and hand it back to him. You get an A+. And in other news, if you've been wondering why the VIX is not popping higher, what the hell is going on with the VIX? I got an answer for you, and here it is. We have some Weisenheimers, some donkeys, who are actually bidding against the VIX. They're betting that the VIX will go lower. They're buying puts on the VIX. They're shorting the VIX. So the level of arrogance in the market, it's not just gambling now. It is arrogance. Stocks only go up. And hey, if somebody thinks that the VIX is going to go up, that is an opportunity not to buy, but to short. Unbelievable sentiment in the market these days. And of course, these morons, you'll show them a danger signal saying, hey, back off, danger ahead. And you know what they're going to do? They're going to dive in Naruto style, heads first, right toward the slaughter. And the last bit of news we have here is that corporate cash or short-term cash holding have increased over 35% year to date. Now, if you're wondering that might go into investments or capital expenditure or hiring more people or not firing employees, you are sadly mistaken, because the money and the cash they have, of course, will go to shares buybacks. We know what the airlines did back in 18 and 19, spending most of their profits buying shares, buybacks, and now they're begging the taxpayer for bailouts. But the question really is, you might think that this is bullish news, right? There's a lot of cash on the sidelines and companies are going to start buying back their stocks. The truth is, if you look at the buybacks data, they haven't started buying yet. Furthermore, when you look at the exodus from corporate executives, over 50 billion bucks exited the market from insiders the last few months. And the question, of course, becomes, are they waiting for a certain event before they deploy the cash and buy back their shares? Would that event happen to be a crash, a big correction? Certainly possible. But you have to keep in mind that we do have an election coming, and shares buybacks will become an intense and heated topic of debate, specifically given all the bailouts and all the liquidity and all the debt occurred in the economy this year alone. So keep that in mind. Lots of cash available to be deployed, but hasn't been deployed yet. The media, of course, already jerked off to this news, and they're having an orgasm left and right, telling everybody to buy stocks because there's a lot of cash on the sidelines waiting to hop in the market. Well, why haven't they? If they do have a lot of cash on the sidelines, why haven't they hopped in the market? Why are they waiting for something? Why are executives dumping their stocks? And by the way, somebody made a good point on Twitter. There are trillions of dollars of cash on the sidelines waiting to be exchanged with other trillions of dollars worth of stocks that will become cash waiting in the sidelines. This is how the market works. Stop making a big deal about cash being on the sidelines. Moving on to the heat map analysis. As you can see, it is a sea of green. The dollar-sensitive sectors, financials, energy, materials, real estate, utilities, and specifically consumer defensives in the green. And the question is it a dead cat bounce or is it a start of something? I'm leaning toward it is a dead cat bounce because, as we will see in the charts analysis, the dollar is not done popping yet. And some notable action here, of course, is Zoom closing in the red. So did Peloton. DocuSign underperformed today. And you see a name like Intel, a value name, overperforming Nvidia, AMD, and the high-flying names in the semiconductor sector. So all in all, the theme from the heat map, a rebound specifically in the dollar-sensitive sectors and value names across the board. But let's have a micro look here by visiting the rotation trade. As you can see, the names on your right-hand side, the laggards, the reopening names outperformed today. The names on your left-hand side, the momentum stay-at-home names. Last week it was a different picture, so we will see if this is going to stick or not. We know that there is actual institutional buying of the reopening names, specifically in the airlines, and today I bought the 40 calls strike in Southwest expiring October 16th. If the stock does this big move, closes above 40, it would signal to me that airlines are ready to recover, but specifically Southwest. And I will convert my options, exercise them into actual shares. Remember, Southwest has the least exposure to corporate and commercial travel. And this is why it is the only name out of all the airline sectors I have in this list. And of course, I don't have Boeing. You can play that game, but Boeing has its own problems. I don't have any banks either. I don't like them. I'm not going to start to like them right now. Although Morgan Stanley, Goldman Sachs, that could be a different story due to the trading revenue. Now, when you look at the other side of the aisle, the momentum names, there is no institutional buying here. The moves are happening due to the gambling in the options market and the call buying mania. Now, you could say that the reopening stocks are bouncing due to short covering. That is true, but there is also institutional participation. The institutions are already all in the momentum names. The expected moves from institutions is to dump momentum names. They already have them. They're not going to add to them at obscene prices. So you have to keep that in mind to anticipate the next move in the market. Where are the scales of power? And now let's move on to the charts analysis, starting with the SPY, the S&P 500. Here's a 15-minute chart. And as you can see, we gapped above the gap, and this was a very positive move today from the SPY. And the next natural target here is 337.60. It is a point where the SPY reversed from before, and it will try to recapture that level and defeat it after the move to the downside. Now remember, we are looking and anticipating a reversal to the downside in the SPY, in the Qs, and the rest of the market. So there is a level, perhaps it is the 33 or 337 rather, level where the SPY will fail again and reverse, so we will keep an eye on that level. But when you look at the macro picture, the daily chart, you can see that the SPY can rally all the way to 343, gapping above a gap, gathering energy for the rally, and again defeating the 337.60. The next resistance could lead us all the way to 343, which would be a more difficult, very hard resistance for the SPY to defeat. So we keep an eye on 337.60 and 343. The SPY will hit a resistance at some point and will reverse back and trend to the downside. That is, of course, my perspective for now, until and unless we see more determinate buying in stocks beside the options gambling mania. Moving on to the Qs, the Nasdaq 15-minute chart. As you can see, the gap that was a resistance and a goal to achieve has now become a support, and the Qs went back and forth, testing the level at the gap, and finally broke from it and made that swoosh look, which is likely to trend to the upside at least for a few more days. Where is the next resistance from a daily perspective here in the Qs? Let's assume we have a big rally this week. Apple goes to 120, tech names rally, and we reach all the way back to the trend line. To me, at that point, it will be worth it to take the shot and short the Qs, because there will be exhaustion after the move all the way to the trend line, and you will see a rejection and a reversal. That is my bet. And by the way, the trend line so happens to be right at the 283 level, where there is a gap for the Nasdaq to recapture. So I see extreme resistance at that point. So we'll keep an eye on that one. Moving on to the Dixie, the dollar index. Here is a 15-minute perspective. And as you can see, as the dollar index started trending lower, the market overall trended higher. We're back at the correlation between the dollar index movement and the market overall. Here are important levels that you need to watch for. The support for the dollar index is at 94.25. But let's be conservative and make that 94.20, and the resistance is at 94.65. This is very important for you to watch, because if you see the dollar index breaking the 94.20 and closing above it consistently, at least from a 15-minute perspective, that would be your signal that stocks would rally further. However, curling back up to the 94.65 level, beating and breaking that resistance will signal a reversal in the stock market, specifically in energy, financials, industrials, consumer defensives, but of course, big tech will get hammered as well. And I see the dollar making this move, either breaking the resistance or the support this week. So it will be very important to watch the action in the dollar index. And when you see the dollar index chart from a daily perspective, you can see the red candle we had today, big reversal after a big move, taking a break, perhaps reloading and planning for a larger move to the upside. This is how I see it for now. And of course, you see the correlation between the MACD and the dollar index chart. You see the snake rolling formation up and down, one step at a time, making a move, taking a break, gathering more energy, and rallying higher. You also have to keep in mind that since July, there has been very big short bets against the US dollar. All these bets has to be covered, and the dollar bears will scramble, creating a short squeeze in the dollar. We've already seen a little bit of it, but perhaps there's more. Moving on to the VIX, nothing new here. You saw the VIX popping in the morning, giving it all back. We talked about the morons who are shorting the VIX, yet the VIX continues to catch the support of 24.8. It did that again today. I do trust the VIX futures. I do trust history that we will see a bigger move in the VIX. And a matter of fact, the morons who are shorting the VIX will only add fuel to its rally, say if any unforeseeable or shocking news event happens. After all, it is the year 2020. We do have an election. Any bad news that will spike the VIX, it will also force the morons who shorted it to scramble and cover their shorts, and you see a massive explosion in the VIX. Remember, if the VIX wanted to go down, it already had a chance to do that. The market went all the way to all-time highs and beyond. The VIX never went back to its natural territory in the 12 and 13 levels. Never. This is always has been the signal that the VIX is waiting and waiting and waiting for a very, very large move to come. Moving on to the chart of gold, daily perspective, we saw gold having a bounce today. I don't trust it yet. I want to see it going back all the way to 1925, breaking above that level, closing above it consistently would tell me that gold has bottomed and it's ready to rally again. But if we do expect a larger move in the dollar index, then it will only make sense that gold has further lower prices to visit before it forms a bottom. Of course, for now, investors are ignoring gold. All they do is switch back and forth between different stocks. But if we do see panic in the market, extreme panic with major red days, Dow down over 1,000, and you see the dollar index spiking, perhaps at that point you need to watch if gold will do a contrarian move where it rallies along with the dollar index. That would be your signal for a bottom. Right now, today, it was a signal for a short-term bottom, very short-term. What's going on with Apple? We've defeated the 113 level resistance. We've talked about this last video. We've defeated it, and now the destination, when you combine the technical evidence, the options market evidence, we're heading to 120. Pretty much there is no stop and sign here for Apple. It is programmed to go all the way to 120, and will try to do its best to get there by this week. And of course, I'm watching the 120 level in anticipation for a reversal and perhaps a short position in Apple. But again, remember, as Apple goes, so will the market. So if Apple is determined to visit 120, you know exactly what the market would do. Follow Apple. Moving on to Tesla, and as you can see, the wedge is being respected. Visiting the upper limit of the wedge and stopping right there, breaking above the wedge will be bullish, at least in the short term. Tesla is no leading indicator here. Tesla is in its mind of its own, being moved, of course, by the action in the options market. A leading indicator would be Apple. Apple reaching at 120 and reversing down would be your signal that Tesla, whatever run it had this week, is done and will follow Apple to the downside as well. Because from a technical perspective alone, Tesla is supposed to reverse from the upper limit of the wedge and trend to the downside, visiting the lower level of the wedge. But we do have the tide that would lift all boats. If the Qs and Apple are determined to rally to certain levels here, the next resistance levels, and we see the options market supporting that with more open interest and more volume being poured into calls, more puts being closed. All of this is an ingredient for the tide that will lift all boats, including Tesla. And now let's move on to conclude the video. As expected, Green Day, Big Green Day on Monday, perhaps a continuation tomorrow, and then we do have a big presidential debate, highly anticipated. We will hear policy responses for the first time from the candidates themselves. You will see the contrast. And remember, we are waiting for a reversal that might very well happen right after the debate. Say Wednesday, we have a red day, we start trending lower. That snowballs into little panics. And as we open October trading, we see more red days. If you're gonna watch one indicator this week, watch Apple shares and the action in the options market regarding Apple stock. Let's say that Apple opens in the green tomorrow, trading above 115. If we do see a surge of the 120 call options, meaning a surge of buying, anticipating Apple to close above 120 by the end of the week, then the market will function exactly as we expect. And now we will look at a turning point. You watch the decrease in the open interest in the 120 call expiring this week for Apple. Once we see perhaps a red day after the debate, if you see the 120 calls being closed in Apple, that is your signal that we will reverse and this bounce is over. If you don't see that, then the rally continues. And of course, you have to watch the action in the dollar index. Equipped with the dollar index, equipped with the action in the options market regarding Apple, you will have great clarity trading this week. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.